Hey, welcome back, everyone. Tom from Kevin, you're trading your chief dealer, keeping you sane in these insane markets. And what a wild ride it has been today. What a wild ride, especially in euro yen, sterling yen. Oh man, if you haven't watched those videos on the crosses, man, watch them. I caught some really great moves and alerted traders to them. Right now, as it stands, euro dollar. I told you yesterday that we had to hold one 1670, or we could dump down to 11621. Haven't quite reached that. Came down to a low of 11637, which is a good sign for the euro dollar bulls because although dollar yen did dump hard. Okay, the euro dollar it really shouldn't have it's been holding its ground. So like if we look at the US dollar index is slightly recovering because of the dollar yen bounce, but the euro dollar itself is holding tight, which is good. If you're a euro bull, it's good. So what is it saying to us right now? Again, we could also look at the euro sterling. Okay, we told you about this yesterday said that a breakdown in euro sterling would actually push euro dollar down as if sterling actually held. Sterling is kind of held tight, sitting really right around 135, like 55 right now. It dumped down to like 135.35, but the euro had more of a push down in comparison to the sterling dollar. But a recovery over this level here of 180, 186, 86.10 will actually show that the euro dollar is starting to gain some momentum and upward. But as it stands right now, euro dollar is sitting at 116.64. Um, let's see, the high was 117.30, right? We were trying to get through this high to get back up to the 117.80 and potentially attack the 118.30 level. So let me come up with some levels here. I just moved the trigger line up. There's going to be resistance at 116.82 right now. If it could break back above 116.82 and hold. So what I'm looking for is, although we didn't drop down to that main support that I had short term, right now we need to get up over 116.82, hold that as long as the low doesn't go. So right now that is the main support point. As long as that low doesn't go, we got a potential to run back to that 117.30. So your key trigger point today, right now at 10:36 a.m. on Thursday, August 14th, 2025, is the 116.82. If you are a euro bear, you're going to want to see price action up there. You might want to take a sale on it, tight stop loss to get back down towards the bottom of the range. If you're a euro bull, you're going to want to see it break the point. You're going to see it actually come up through the point, come back down, look for a fib level at that point to buy it. Okay, with a stop at the low. So you would do fib level from, let's say, from here to here. You'd say that's the top. So you do. Hang on, let me put up a fib level for you guys. Show you how I would do it. Doesn't mean that it's right, but it's the way I do it. Works for me. So here we go. All right. So what I do is I just put a fib on this leg. Why did I choose this leg? Well, this recent low that we have, I go to the left. The last time I traded lower, it's right there. So that's like my reference price, right? So, or we could call critical price of the Fibonacci structure. So if we do this, if we could trade up through the 116, say 85, okay? If we come down, all right, I'd be looking to scoop, like, look, at the 0.618 and potentially even my 0.82, all right? But I really wouldn't want to see that break that low. So really, I'd be looking to buy right over here at that 0.618. All right, retrace, which happens to be right around 116.50. So a break of 83. If you're a bull, you'd look to actually buy 116.50, or you could do it the other way. You could go, okay, I broke the 80, I'm going long. Stop loss is like 116.45. Could do it either way. I mean, all depending on, how you like to trade. So that's what I got going on for you guys for the euro dollar right now. Critical price that you got to get over is that 116.82. Um, and also it needs to hold the support level right now, right at this point, right here, 29. I could drift a little bit lower to 23. It's only 7 points, 7 pips. But I would like to see it break up, or if it drifts down, and recovers the fib level. Same thing if you're a bull and we do turn down and drift down, touch this level, you're going to see price action because that's also at a 0.82 fib, and then we could see a reversal upward. So you got a couple of ways of doing it. If you're a bear, you might want to sell up over here, try to recover back at 116.23. If you're a bull, you might want to look to buy down here, make sure it doesn't break through the 0.82 fib, or you want to wait for it to go up through the 116.83 with a slight retrace back down to 50. Lots of different ways to skin this fish. All right. So that's all I got going for you guys. If you like what you see, please like and subscribe. Don't forget, there's a free video and ebook in the description on price breakouts themselves. And you can use it with Fibonacci numbers. You can use it with pivot numbers. You can use it with all sorts of different things. So remember, I'll see you tomorrow. And also enjoy the party, but dance near the door. Cheers.